Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, January 5th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. We are just past the NFP report. NFP report came out here just a minute or two ago. 216K versus a 170K estimate. We also have unemployment rate coming in 3.7 versus 3.8, and later on ISM non-manufacturing PMI coming up. But for right now, that early number here has led to some selling pressure, a big drop to new lows, and we are now testing prices just above the previous month's midpoint here and the December FOMC key level 46.99 and a quarter. So far, day over day, lower highs and lower lows on this pullback. Still, we haven't failed at the midpoint of the previous month's range. A failure here, and it opens up the previous month's low for much more weakness ahead and a gap fill as well. Now, if we come in here and we find a strong rejection, a bullish rejection, that could open up a return back toward highs as we develop an expanding range or develop, more of that rectangular type of range up ahead. So big time level right here. If a rejection can be seen, we could be looking at a bounce opportunity that could develop, and if the bounce and rejection is strong enough, it could become a bullish outside day in the best case scenario. But right now, keeping an eye on the previous month's midpoint. Taking a look at the NQ, similar price action. This one is already trading right at and just below the previous month's midpoint. Prices have dropped down, lower highs, lower lows. A bearish reaction here to NFP report, but starting to see a little bit of lift off the lower end of the range. If we start to develop a rejection here and can return back above the previous session's lows, which is about the 16,435 zone, if we can get back above the previous session's lows again, the potential for an outside day could be there given the uptrending market. It wouldn't be out of the question to see a return back toward highs for the year, especially if a good enough rejection can develop at the midpoint of the previous month's range. A failure here again, and you're opening up a return back to the previous month's low. All right, let's take a look here at the crude oil chart. Crude oil up about 1% right now, but is stuck in the middle of this range. We've had some high range back and forth price action. High range failed new high, high range failed new low. Kind of a high range digestive day, if you will, with the squat bar properties as well. And now inside day here today. And this is all happening kind of at the apex of this wider triangular pattern here. That's building up some energy. This back end right here is 12 points. That could provide a big time breakout up ahead. For example, through 74s could open up 84 to 86 up above. Could be a big time move if we can get an upside break back through 74s. Any failure through 70 and 69, and you're opening up 64 as the edge test. So which way are we going first? Got to continue to let this thing build out and chop, building up some tremendous energy. At some point here, we could release that energy for a very nice move. Right now, to begin the week, though, a lot of compression. Do we get a move down with a failed new low? That could open up a rally up ahead. Do we just blast off through 74s? How's this going to play out? So continuing to watch crude oil here near the apex of this larger range. Looking at gold futures, right here with gold, weakness after failing to hold above the 2082s. First trading day of the year, failed new high and working its way down. Mentioned before that if we're going to fail there, we have a shot to go get 2029. That's this level right here, 2029. It's the lower 25% from the midpoint of the key range. The upper 25% is 2111, and I mentioned this could be the range that we stay within for a little while here, as this wide impulsive move here keeps prices in check for a little while. So 2029 is going to be a big level here to test up ahead. Failure through that level and you start to open up the lower edge of the range, which takes you down into about the 1987s and the key range low. So 2029 is going to be important here. It wouldn't be out of the question again to see a bounce back up within the range as we continue to develop in here until proven otherwise, with a downward bias after day one rejection. All right, taking a look lastly at the YM. The YM here seeing some weakness, still mostly within range. So if you look at the wider range here, say from these lows this way and the highs this way, we've been mostly within this range for the last 15 days. So this is 3 weeks within this range. We are down within the range right now for the first week, but that doesn't mean that we stay down. Again, we could come into this edge, find a rejection, and work back up within the range. Again, this is a narrow 15-day range, narrow 3 weeks, so you probably can't stay in that narrow range and continue to facilitate trade for the long haul. So at some point you need to widen the range. You either drop it a bit here, then rally it up a little bit higher, and now you've widened it beyond what we're seeing now. Or maybe you get an impulse move down, bounce back, and now you have a new key range. But at some point we need to open up the range a little bit. So as this thing drops, if we can find a rejection on the low today, then perhaps there's a little bit of a bounce back up. Failure though, and you're widening the range down toward the previous month's midpoint. Key level test right there, 37K, a failure there, and the previous month's low opens up. So that's a 1,000 point spread between those two levels. So failure to hold this edge right here at 37.4, and you have a bit more downside. Bulls want to keep that edge bid, otherwise you're dropping into 36K. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.